Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to talk about expanding internationally from Canada to Puerto Rico. On the line with us is Dan Kimmis, our CBD correspondent.
What are you doing?
Drinking coffee.
Nice.
Yeah, there's no cannabis in it yet, but in October, that's going to be an option up in Canada. That's the next wave of Canadian cannabis. So beverages and edibles will bring a new consumer to cannabis. On October 17th, according to this Yahoo Finance article, is the second wave of cannabis expecting to roll out. So you're going to have beverages, edibles, and topicals hitting the market. So consumption methods are going to be different. The types of consumers are going to be different. I think everyone up there is kind of hoping to sell some more stuff. The sales in cannabis were a little disappointing. Slow rollout. Obviously, they fumbled, just like every emerging market we've seen in the U.S. and in every state.
I was just going to say, interesting, right? They get a chance to see other markets, and yet we have yet to see somebody do it, click on the rollout.
No, in fact, we just saw Canopy Growth CEO Bruce get fired basically by Constellation Brands, the owners of Corona. And Corona's not the biggest player, but they've put almost $5 billion into it. They're definitely going to be changing the game with beverages on their mind. And there's other big players too. So we saw last year, there's Constellation Brands, and then speculation beyond that with Coca-Cola maybe coming in and Pepsi, for example. On the flip side, we saw a merger between Acreage Holdings and, was that also Canopy Growth?
Yeah.
So there you go. Bruce is really good at putting deals together, but none of them really kind of made a lot of money. On yesterday's podcast, we kind of talked about social media influencers bringing people in, more of a tourism thing, but not really translating that into dollars. And I think with a lot of these other groups up in Canada, they're making a lot of moves, a lot of mergers, a lot of speculation, but a lot of that is PR. It's not really translating into dollars yet. So a lot of speculators are putting money into the stocks, and it's working. A lot of these ETFs are up 40, 50% year to date. And so the biggest advantage up in Canada is their ability to export internationally. They've got agreements with Germany. Then you're also seeing Vireo Health expanding into Puerto Rico. That's a Minnesota-based multi-state operator expanding into Puerto Rico, probably for the tax advantages. Some of the tax advantages include Act 20, Act 22, Act 73, and Act 74. The short of the matter is, if you look up those benefits, you're going to see a 4% corporate tax cap. Any investment made into Puerto Rico, you're going to see a 50% tax credit on property, plant, equipment, and in some cases 100% deductions, especially in your first year of operations. Everything's 100% deductible. So it makes sense for any company to be operating in the U.S. to have an entity in Puerto Rico, especially if you're CBD. Your sales have to be made from Puerto Rico in order to take advantage of a 4% corporate tax cap. For a company in California, you'd be saving over 24%, Washington over 18%.
Yeah, it seems to me that a variety of smart people that I've talked to have talked about the advantages of looking at places like Puerto Rico. I'm not all that familiar myself, but I do keep hearing from the wizened ones that, look around there for, your international expansion, right?
Well, here's why. Puerto Rico is a protected U.S. territory, but Puerto Rico doesn't have congressional representation in D.C. And if you remember from school, you can't have taxation without representation, which makes Puerto Rico the only place in the world you can go as a U.S. Citizen or U.S. business and not be forced to pay U.S. income tax.
Oh, I dig that.
Yeah, in fact, our friend Craig Gimbel, he's with the Nutrient line and had just moved down there. I know Dab Stars is looking at it. Incredibles, the edible company, is down there. And it makes sense. If you are in the CBD industry and you're not in Puerto Rico, you're literally wasting 25% profit margins.
Jeez, real money.
Yeah. And there's some banking options down there. It's not too great, but in general, based on this chart of the week by MJ Business Daily, we're seeing that the ranks of U.S. banks serving cannabis companies growing. We've seen that from BlackRock, which is a hedge fund. They're not waiting for the Safe Banking Act or the Safe Harbor Act or the States Act. And so they're kind of just moving forward. which is jeopardizing their charter, their bank charter. But I think they're taking so few companies that it's not really all that problematic. It's not a huge risk to the bottom line or business yet. But the article goes on to say that the number of financial institutions actively seeking cannabis-related businesses in the U.S. is rising. But I think there's a lot of other companies out there that aren't telling companies what they do, because ancillary companies are getting their bank shut down. You could be somebody that just does graphic design, and if you have online marijuana design as your name, you're going to get your account shut down, which is unfair and problematic. And so a lot of people are just skirting that by saying that they're not in that business, which isn't the right thing to do. It does make it easier.
Oh, the number of times, so in 5 years in the industry now, I've been part of, I think, 13 different times where people lost their bank accounts.
Yeah, we just did a podcast on terpenes and talking to Forefront Ventures, who has a variety of businesses from producer processor to ancillary, and they constantly get their bank shut down because of how they do business. They're based, I think, in Vancouver, BC. They have entities in Chicago, and they're doing big deals. In fact, they just had a $50 million merger with Cannabis Capital Group. So there's a lot of movement. Looking back at Canada, though, it's been about 6 to 9 months since they legalized. And so looking at some of the price analysis, it's interesting to see that they've kind of broken free from that initial high price per gram. They've probably figured that out. So they initially sold their flower at about $10, $11 per gram. The pre-rolls, however, were $15, and the packaging was ridiculous. So it was like a Russian doll where you had to take a box out of a box out of a box and then a tube, and it was ridiculous. But not a lot of companies, or there wasn't a lot of availability. We saw $11.45 per gram, but the availability of products and brands were only 11 available brands in Quebec from the onset. So obviously not a lot of choice.
Well, early in the game too.
Exactly. And that's kind of, we see that all the time. But yeah, they're just about to start allowing edibles and beverages and topicals. So it's definitely going to get new people into that store. And as we've seen with other headset reports, that basket analysis will just kind of show us what other brands they buy, just regular product. Consumer behavior will show you that they'll just go and grab something and try it, like an edible on a Friday between the hours of 3 and 5. Half of all baskets have an edible. And so I guess we'll see in October if Canada's like every other new emerging market with beverages and edibles kind of bringing new entrants into the market. My guess is that sales will increase. So we'll check back in 6 months and do another Canadian report.
Oh, I dig that.
And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.